Hello, good evening slash afternoon if you're still in the UK. Welcome to this webinar around moving and living in Dubai and looking at all the tax implications around living and moving to Dubai from a UK tax perspective. So my name's Arj and I am one of the co-founders of Tax. We help individuals file their tax returns, but also provide expat tax services. And our aim is really to make expat taxes easy. So whether you're moving out of the UK or you're moving back to the UK, or if you've got a rental property but you're filing from abroad, our aim is to make that as easy as possible. And I'm joined by my co-founder as well, so I'll pass over to you, Eamon, to introduce yourself.
Perfect. Cheers, Arj. Hi, everyone. So my name's Eamon, and myself and Arj, we spent a number of years working at PwC, one of the big four accounting firms where we sort of specialize in international tax. And that's where the whole idea for tax came, and creating software for sort of expat individuals like yourself. So as Arj mentioned, as we go through today's sort of webinar, hopefully all of you guys by the end of this will have a good idea on what you need to do, if anything, and how taxes work. With HMRC and the sort of crossovers between UK and Dubai. But I think before we get into sort of all the technical side of things, I think Arj's got a quiz or create a quiz for all the members on here today.
Beautiful. Thanks, Eamon. So yeah, before we get started with all the tax technicalities, we thought we'll start off with a more light-hearted quiz. If you've got a mobile with you on your left hand, right hand, or you can also use your laptop, we'll start off a quiz. So get a mobile if it's next to you, and that will be the quiz. And then we'll go into some of the different types of residence, how your tax residence can change kind of based on different ties and how many days you spend in the UK, all of that good technical stuff. And then we'll look at a couple of stories and scenarios that might resonate and affect you when moving to Dubai. And then we'll look at how you would file a self-assessment with the SA 109 pages, that's the tax residence pages, and how you can do that easily and super quickly. And then if we have time, we'll also look at if it's more efficient to keep a property within a limited company or in your own name, and some of the other rules around becoming a non-resident with capital gains and so on. And then at the end, we've got time for a Q&A. But I do also want to say, if you have any questions, just add them in the comments section, and we will try to answer those comments throughout as we go along. We'd like this to be as interactive as possible, so please do shoot any questions through, and we'd be happy to help. But to start off the quiz, so if you've got a mobile to hand, you can scan the code on screen. Otherwise, you can also go onto slido.com on your web browser, on your Safari, whatever you're using, and then you can sign in to the quiz. And this also just gives a couple minutes as well while people log into the webinar. So let's see if this works. I will also scan it myself just to make sure Slido is working. And then we've got our first question. So just as people join, to kind of give people some time, if you could have one superpower, what would it be? Now, I know mine would be to live a tax-free lifestyle. I'm not sure if that is a superpower. And as a tax agent with HMRC, I'm not sure if I'm allowed to say that, but that would certainly be my option. And I can see we've got some people typing. Mind reading, that's a good one. Read minds. Oh, wow, that seems to be...
They've got to be sitting together. I think for me, it's avoid back pain for myself. No sporting injuries.
No sporting injuries. That's good. We've got one invisible cloak. That just reminds me of Harry Potter for some reason. We've got some in terms of teleporting. That would be great. If I could teleport down to Dubai right now, I'd love to. It is at the moment in the UK, I think when I woke up, it was -4 degrees. So I'm sure it's not -4 degrees in Dubai. To be invisible, to pause time, invisibility tax-wise. I like that. That's the goal. That's the goal. Cool. So as more people join the quiz, we'll just get started as well. So what you can do now is you'll be asked your name. It doesn't have to be your real name. It can just be a nickname for the quiz itself. We do have a prize at the end as well for the winner of the quiz. It will be something tax related. But yeah, you can join the quiz by inputting a nickname, name, or whatever you'd like to be called for the quiz. It's just a couple short questions around tax residence and to see how much you know. Think of it as Who Wants to Be the Tax Man? That's a really that's good. But yeah, think of it as Who Wants to Be a Millionaire, but the tax version of it. There's a fun fact actually as well. So the average household will become a tax millionaire in their lifetime. Probably not in Dubai if there's no taxes there. Right, so I don't know why that didn't show the question. But then there we've got our first question. As a UK tax resident, I am taxed on UK income, UK capital gains, worldwide income, or worldwide capital gains. Now, we'll kind of go into all the kind of technicalities of all this in a bit, but it'll be good to understand kind of based on what we already know, whether you are taxed on UK income, UK capital gains, worldwide income, or worldwide capital gains. And with a hint, you can pick more than one. And if you have just joined us as well, you can also can kind of join the quiz by scanning the QR code on the left, or by going to slido.com and then putting in the code 3189055. I'll give everyone just another 20 seconds or so before we look at the answers and then move on to the next question. And we've got 17 out of 24 answers. So I think we can move into the next queue. But let's just see the answer on this one. We'll give everyone 5 seconds. Might do a little countdown. Come on. Oh, there we go. Nice, perfect. So you are taxed on all of them. So this is quite interesting. And this actually has a lot of tax implications, because when you leave the UK and how many days you spend in the UK impact your tax residency. And obviously, if you move to Dubai and earned income in Dubai, you don't want the UK to tax that. At least assume that you don't want the UK to tax it. But the answer is absolutely everything. So the UK will tax you as much as they can. And now the next question. So as a non-UK resident, select all that apply below. Are you only taxed on your UK income and gains? Are you taxed on your worldwide income and gains? Have you got a personal allowance? Can you hold any UK assets as a non-UK resident? We'll just kind of give everyone another 20 seconds or so for this question. And as a non-UK resident, choose the ones that you think might be applicable to you. And we'll go over the whole what makes someone a non-UK resident as well in a second. Cool. So if you are just joining us as well, you can scan the code on the left or go to slido.com and join using the code 3189055. And we'll give everyone just another 5 seconds before we move on to the next question. Awesome. So, as a non-UK resident, you are only taxed on your UK-sourced income and gains. Now, I guess a bit of a caveat here, the only case where that may not be the case is if you're working as part of like the Crown Service and things like that, when you would still be taxed on the income, even if you're working abroad. But kind of generally speaking, as a non-UK resident, you're only taxed on UK-sourced income and gains. For example, some rental properties in the UK, or if you sell a buy-to-let property in the UK, make a capital gain on it, and be chargeable to UK income tax. Nice and hopefully quite an easy one. As a British national, do you keep your tax-free personal allowance? Just a true or false question. No option to phone a friend or for the 50-50. It is 50-50. Just another 5 seconds or so to get all the answers in. And this is nearly it. Awesome. So the answer is true. So as a British national, you will keep your tax-free personal allowance. So for a lot of the members of the Brits in Dubai, you will get to keep your personal allowance when you move to Dubai. So if you do have any rental income in the UK, £12,570 of that is covered by your tax-free personal allowance, which for many people is a relief, and often means that you are kept under the tax threshold when filing your tax return. And then I believe this is the final question. We got one more after this. Can you be treated as a resident and non-resident within one tax year? So, for example, you might leave the UK. Could you be UK resident, but then also a UAE tax resident within that same year? And again, you can kind of see we are trying to serve up what we're going to be talking about in a couple minutes. So we'll just give everyone another 5 seconds or so to answer this question. And the leaderboard, I believe, is based on how quickly the questions are answered. So if you got everything right and answered it super quickly, and then the prize is yours. And let's move on to the next question. Oh, that's yes, by the way, you can be treated as resident and non-resident. That's when you claim split year treatment. So essentially, you could be UK res, but then you can claim to have part of your year treated as non-resident, and we'll talk a bit more on that in detail with the relevant scenarios and the cases that may qualify for that. Perfect. Final question. As a UK national, will I be taxed on money that I send back to the UK if I'm a non-resident? Yes or no? So I guess we covered if you're a non-resident, but you earn money, would you be taxed on it? But what if you bring that money back into the UK? What's the implications of that? And we'll just give everyone another 5 or so seconds for the final question before we look at the answers, then look at the leaderboard for the Brits in Dubai quiz, the tax quiz. Awesome. The answer is no, you won't be taxed on it, and most of you had got that right. So if you were non-resident, you wouldn't be taxed on the income. So if you were to kind of bring that back for family, for loved ones, or after your time in Dubai, if you wanted to move back to the UK, you wouldn't be taxed on that income, even if you were to remit it back into the UK. Perfect. So that's the quiz, and congrats to
Waleed.
Well done, Waleed. Smashed it with 1 minute 20 seconds on the answers. So that was very quick. That was good. And then the hardest question was, as a UK resident, I'm taxed on absolutely everything, I guess, is the answer to that one. Perfect. Well, thanks for playing the quiz. So now we're going to move into some of the tax technical elements of understanding the UK residency tests. And for this, I'll pass over to Eamon.
Thanks a lot, Arch. Great quiz, and good to see so many people with the answers. Give a shout out to Dom as well, who was also the only other person to get all 5 right, so absolutely smashed it. So I guess going into the more technical side of things, right, I think the best place to start is on residence. So as you can imagine from the sort of quiz there, a lot of your taxes and what you pay in tax depends on where you are a resident. So in the UK, we have something known as a statutory residence test. Now, essentially, it's a set of rules that are used to determine your residence, right? So you will either, once you get through this test, be a resident or a non-resident. Now, when we start looking at this test, there's some initial sort of, I guess, automatic tests that if you meet any of these conditions, then you'd automatically be a resident or a non-resident. So if, for example, as you can see on the screen here, you spent 183 days or more, so that's typically just half of the year, 6 months or more in the UK, then you'd be considered a resident. If all of your homes are in the UK, so you also don't have access to any accommodation anywhere overseas, and you spent more than 30 days in that home, then you would be a UK resident. And if 75% of your work days are spent in the UK, then you'd also be considered a UK resident. So pretty much for people who are living and working in the UK, as you can imagine, would be considered a UK resident. Now, just like we have automatic tests for residents, you have the same for non-residents. So for you guys out in sunny Dubai, you're probably going to meet some of these conditions, a fair few of you. So essentially, we'd be looking at the last 3 tax years. So, you know, if we're looking at the 21-22 year, which is what people are filing for this month, you'd be looking at the 18-19, 19-20, and 20-21 tax year. But if you weren't resident in any of the 3 previous tax years and you spent less than 46 days in the UK during the tax year, you're automatically considered non-resident. If you are resident in at least one of the previous 3 years, then you would be also non-resident if you do less than 16 days, so slightly lower days. And the final test, which is known as the automatic sort of overseas working test, is if you've left the UK and you're working full time in Dubai, so you've got a new position out there, So you're working out there and you come to the UK for less than 91 days, and less than 31 of those 91 days are for working purposes. Quick note on that one as well is it could be something known as like significant breaks. So if you came to the UK for over 30 days at a time, you could sometimes trigger residence. So just something to be wary of. Now, let's say you've looked at these tests and you don't meet either of them, so you're not automatically resident and you're not automatically non-resident, then what we have in the UK is something known as a sufficient ties test. Now, just to make it as simple as possible, what this is essentially these 5 things you can see on screen are known as the ties, and then there's almost like a chart, which is how many days you've spent in and how many spent in the UK, and how many ties you have would consider if you are a resident or a non-resident. So, for example, let's say you were resident here in the previous 3 years, and in the tax year just gone, you came to the UK for 100 days, let's say. So, to be a resident for 100 days in the UK, you would need 3 ties. So, you may have UK resident family, which is sort of immediate family, so you sort of your spouse, children, or parents. Um, and as you can see here, you may have been 91 days or more in the last 2 tax year, accessible accommodation, and so on. One thing to note is on the ties here, if you actually own a home in the UK, it doesn't mean you have accessible UK accommodation. It's only if it's sort of left empty and available for you to go and stay in when you return to the UK. So what would happen is you'd go through the ties and you'd determine if you were a resident or a non-resident. So once we've established that, we sort of move on and see whether you could claim split year. So for many individuals, right, you may have been in Dubai for a number of years, so this might not be too relevant. You're thinking, great, I've seen those conditions, I'm going to be a non-resident. For others of you who may be watching this stream, you may have seen, damn, I'm going to be considered a UK resident because I spent 7 months in the UK, for example, until I moved out to Dubai in January. Now, the good thing is, if you are considered as a UK resident, you do have the option in certain cases to split the year into 2 parts. So essentially, you would have a residence part and a non-resident section. So this sort of leads back to the question we had on the quiz around whether you could be a resident and non-resident in the same year. You are technically a resident, but you can split the year. Now, the conditions for splitting the year if you're leaving the UK is if you're starting to work full-time overseas, or you may be a partner of someone who's starting to work full-time overseas, or you may cease to have a UK home. Now, just to note, you have to be a non-resident the following tax year to split the year. So, for example, if I move in January let's say next week, I just say, you know what, it's been freezing here for the last 3 weeks. I've had enough of UK. I'm moving to Dubai. So let's say 22nd of January, I move over to Dubai. I could split the tax year, meaning that my earnings from later this month until April would not be sort of subject to UK tax, provided I'm a non-resident next year. So I would have to make the commitment that if I want to split this tax year, next year, April to April, I remain a non-resident. And just like you can split the year sort of going out, you can split the year back in. So if there's some of you who have been in Dubai and thought, had enough now, going back home, made my money, saved up the tax-free earnings, time to go back home, then you may be able to split the year back in. So it just works the exact opposite, right? So you essentially can sort of go back to England halfway through the tax year, and provided you meet conditions such as starting to have a home in the UK, you've left your job in Dubai, then you can essentially split the tax year into 2 parts and then be considered a non-resident up until you arrive, and a resident after you've been here and arrived back in the UK. So you'd only be taxed from the point of your arrival. So hopefully that gave a little insight into residence and split year. I think the best way to really get you guys to picture it is to use some examples. So we've got a couple of stories for you, one being just a standard non-resident, one being an individual who moves for sort of 3 years, split year out, split year back in, and the final one being like a 1-year trip. So I think the first case we'll get into here is someone, well, Abdi, who's left the UK and he permanently lives in Dubai. So probably the case for a lot of you watching this. A lot of members we've dealt with from Brits in Dubai have decided to be living there for quite some years. Now, in this situation, so Abdi's living in Dubai. He just visits the UK occasionally, holiday, may pop back for Christmas or, see some friends and family, watch a big football game maybe. So, the actual days in the UK are very low. He doesn't work whenever he comes to the UK, but he does own and rent out UK property. That could be investment property, or it may be his home, which he used to live in before he moved out to Dubai. So he's still receiving that rental income. Now, in this situation, we would assume that Abdi is meeting the conditions for non-resident and therefore only has to report his UK income and gains. So how his UK position would look, we'd have the tax year, April to April. So let's use this year, this January as an example. So right now, everyone is rushing and filing their 21-22 return due by the end of this month. So if in April 21 to 22, he received rental income on this tax return we're preparing now, he would essentially say, I was a non-resident. So that would be on the residence pages. He would put in the days he spent in the UK. He would say where he is resident, which is Dubai, and would just report the rental income from the UK. And just as the rules are normally here, you can use all the traditional expenses such as agency fees, service charges, ground rent, replacement of white goods, and so on. And then the profit would be put through the sort of UK income tax rates. And again, as we saw in the quiz, if Abdi's a British national, and it's not just British, a lot of nationalities still received a personal allowance. So it's what a lot of individuals do. So you'd have the 12,500 tax-free allowance to use that. And that would be his situation. So really nice and straightforward. Doesn't have to show HMRC what's happening out in Dubai, who he's in business with, where he's working, how much he's earning. No need for HMRC to know, just the UK side of things. And then the second example, we've got Sarah. So Sarah's obviously got a little bit more of a complex situation here. She's decided to leave for 3 years and has obviously moved mid-year. So this just actually ties back to what we were talking about around the split year. Now, because Sarah would have been in the UK up until the 15th of November, she's been in the UK for more than 183 days. So she would originally be UK resident. Now, because she's decided to move to the UK for 3 years, we know that she's going to be a non-resident in the following year, move to Dubai for 3 years, sorry. We know she's going to be a non-resident the following year. So what Sarah can do, she can split her 21-22 tax year into 2 parts. So as you can see there, she'd be a UK resident between the 6th of April, 15th of November, and then a non-UK resident moving onward. So from that point onwards. So what that means is she'll be taxed on all her income up until she leaves. But if she starts working in Dubai in November, then the income earned from Dubai will not be subject to UK tax because she would officially be split year and be treated as a non-resident. Now, if you also remember, one of the ties for when you're working overseas is you could come back for 90 days or 30 work days. Now, when you split the year, those days are essentially pro-rated. So as you can see here in Sarah's case, the 90 days is pro-rated to 37. So what that means is between 15th of November and the 5th of April, she can come back to the UK for 37 days and still remain on the split year. If she was to come back for 40 days, then you wouldn't be able to split the year because you'd be considered a resident with too many UK days. And then let's say the year she's in Dubai, she would file, just as the case we've talked about, as a non-resident. And then when she decides to return to the UK, she would be able to split the year with a similar approach, but in inbound. So again, that means that all the earnings she had up until she arrived would be disregarded, be non-resident earnings. And then from the point she arrives back in the UK, she's taxed on worldwide income from that point onwards. Great stuff. The last example we've got for you guys, and This one probably isn't relevant for all of you on here because you've probably been in Dubai for a few years. You've probably, intend to stay for a bit longer, and because you're already in Dubai, this is more for people who are looking to move out. But I'm sure there's still some of you who it's applicable for. Now, in this scenario, we've got two individuals who both go to Dubai for just 1 year, but they go at different times, and you can see how different it's going to impact their sort of tax liabilities. So if we look at Chris here in this example, he's left in October 2022 and James is left in April 2022. So if we remember back to those tests we just looked at, now Chris moving in October doesn't actually break his residence because he's going to end up, if he goes for a year, October to October, because of how the UK tax year works, April to April, he's going to end up spending 6 months in the UK for each tax year. He won't be able to split the year and he will be a resident for both years. So what that means is the entire year for his situation where he was working in Dubai is going to be subject to UK tax. So in this case, bad news for Chris. He's got to report the UAE income on his tax return and pay UK income tax to HMRC on that. Conversely, James, he left in April 2022. So he's doing a April to April. So that means for the 22-23 year, he's managed to get right under the days to be a non-resident. So for the 2022-23 tax year, he is going to be considered a non-resident, and therefore he doesn't have to report the UAE income to HMRC and pay the UK tax on it. So probably saving thousands, if not tens of thousands, compared to Chris. So the key thing is when you're going somewhere like Dubai, a low tax, zero tax state, you really want to be careful with your dates when you're leaving, when you're coming back, understanding the residence, because it can really impact your sort of taxes. So that ends the final example. I can see there's a few questions coming in. So as you run through the demo, I'll have a look at those and we'll pop some answers up afterwards. But for now, I just want to hand back over to Arj. He's going to actually show how you can actually be compliant in these cases. And if you are, for example, a non-resident with UK income, I know there's some questions about joint ownership and so on. So that will hopefully all be shown. He will show how the tax software can deal with it. So thanks a lot, everyone, for listening, and I'll hand over to Raj to give a quick demo.
Awesome. Thanks, Eamon. Perfect. We will get onto those questions in a second, and hopefully some of those will be answered as I go through a bit of a technology demo at the same time. So I guess kind of Taxed is a company that myself and Eamon had co-founded a couple of years ago. And we were working in the expat tax world, and we saw just how the process was so slow and it was expensive. We were charging sort of thousands of pounds for a tax return when it's information that we would get on a spreadsheet or get via hundreds of emails, and then manually kind of key in all the figures and then complete a tax return. So what we wanted to try and do was take all that tax technical knowledge and kind of break it down into something that's quite easily understandable, so that you don't need to necessarily know about all the residency rules. It's good to know, and it's good to understand how many work days and things you can spend in the UK, but it doesn't need to be something that you study and have to complete exams about, I guess. So the way that we kind of built Taxed is it's a 3-step kind of process. The first step is we ask you some introduction questions that helps us to build your personalized experience and questionnaire. And then the second step is all around actually answering some of the questions relating to your taxes. So that could be your residence, that could be some UK rental properties, and then also things like your address and your UTR, which you need to file a self-assessment with HMRC. And then the final step is just to review your tax return, and then you're ready to file. So let's start with step 1 anyway. If you use Taxed to file a self-assessment, we just ask you some questions, and it's almost like having a conversation with an accountant. Every question is almost like a yes, no, or like these kind of boxes. And as we go through it, I'll kind of show you what it looks like. So in this particular case, if you're moving out of the UK, you might need to click this one. to say that you are resident of another country. And this enables the SA 109. So for those of you that are more tax technical, that's a separate page within your self-assessment, which is a little bit more complicated because of all the kind of residency issues surrounding it. But if I click that, that will then unlock my residence category for me and for my questionnaire on tax. And then you can select your job status. I'm going to be completing this as the case of Abdi. So I'm a non-resident throughout the year, but it also supports split year and things like that, which I'll kind of touch on. But for Abdi, I can just select landlord for the rental property in the UK. Once that's done, you can see on the left-hand side, there's a load of categories. And after these categories, we can start to click on each one and then complete each section. And as we can see here, I've already started to complete it. It's on a cooking show. I've got the final kind of product ready to go. But in this case, we'll also kind of walk through each question. So we start off by looking at whether the case is a simple one. So one where you might be non-resident for the entire year. Now, these cases are more simple because there's less questions. We don't really need to look into each of the ties in detail. So in this case for Abdi, I would have selected simplified, and then I can hit next. And then I just need to input a bit of detail around how many days were spent in the UK and how many of those days were working. Once that's complete, I can then move on to a couple other questions around, was I a UK tax resident in the previous tax year? So if we're filing for 21-22, we're then looking at the 2021 year. And then if I worked full-time overseas during the 21-22 tax year. And you can kind of see that what we've essentially done is taken some of those kind of residency tests and kind of taken the tax kind of technical knowledge from that, but reworded it, restructured it in a way that's easy to understand and a way that allows us to complete a tax return without having to kind of ask you a lot of questions or obtain a lot of detail from you. And then we can input kind of details of nationality and where we're currently tax residents. And this obviously impacts things like our personal allowance and so on. Now, if a user was filing split year, it's the same kind of process, but we would select the complex scenario. So this goes into a bit more detail around the automatic residence test. So if I'm automatically non-resident, some of the different tests that we were talking about a couple of minutes ago, and then the automatic residence tests, and then the days and work days in the UK. So this example is looking at Sarah, who was leaving the UK in November. And then these questions all move towards that idea of kind of filing a split year tax return. So because of the ties in the UK and because of the number of days in the UK, in general, she would be a UK tax resident. But we can make a claim to file split year treatment, and just kind of making sure that Sarah, in this example, qualifies for split year treatment. We can ensure that she kind of meets those cases because she started to work full-time overseas in Dubai. And then we can choose a date to split the tax year and then input where she was tax resident for that year. For example, in the UK for the first half and then in Dubai for the second half. Now, each of these questions as well has some help text that as you go along, if you do need to file, you've got a bit of support there through the platform itself. Now, I'm going to switch it back onto simple and file rental, file the SA 105 pages, which is the sort of rental income pages for Abdi. And then this will also cover some of the questions that we had in terms of if a property might be jointly owned and how that impacts your tax-free personal allowances and things like that. So I'll move on to the rental section, and you can see that from a tax perspective, the way, excuse me, the way that we ask these questions are pretty similar. We try to make it as easy as possible when kind of going through the questions that kind of everything is in a non-tax technical way, not using any tax kind of jargon. Everything is as easy as possible when coming to answer. Right now the page is loaded. Let's have a look at residential properties in the UK. So this is looking at for Abdi with a rental property. We just ask some questions to help us identify what type of property it is, how much kind of income, and if the property was owned, was under joint ownership. So what I can do here is I can mark this question as yes, and essentially on your tax return itself, it would then show up as a jointly owned. It would show up as it being owned with your wife or with a joint owner. And what happens here is the total income from the property gets split into two. So, for example, if the kind of total income was £20,000, then that gets split into 10,000 for each of those kind of joint owners. So that way you can maximize your tax-free personal allowances, because each individual would get that 12,570. The thing in the UK is that each individual has to file a separate tax return. There's not a concept of kind of joint filing. So each kind of tax return would need to report the same amount, but would both be entitled to that tax-free personal allowance. So hopefully that answers the question around the joint ownership, or if you own a property with your husband, wife, or partner. And then tax deducted from your properties. Now, as a non-resident, you may have tax already deducted from your rental income, unless you've applied through the non-resident landlord scheme, and you can apply to have tax not taken off, because in many cases you will be kind of overpaying tax if they are taking tax off your income. That's not taking into account your personal allowance or any expenses that you have on the property. So kind of up to you if you want to claim that. It's a short kind of form online to enable you to not have any tax deducted. In this excuse me, in this example for Abdi, I'm going to say that there was some tax deducted. We're going to do £2,000 of tax being deducted, and then we'll move on to the next question around how much was earned in the tax year. So this is the sort of total revenue. And if it's a jointly owned kind of property, we can add the kind of total amount. And what we do as part of our sort of calculations is we then split that by half. Once we go through revenue, we then go into expenses. And expenses, as Eamon mentioned, could be things like your mortgage interest, letting fees, accounting fees, repairs, maintenance, and so on. And we suggest all the relevant landlord expenses that are available to you. So hopefully this kind of covers everything that you may have had to incur if you've got a property in the UK. And if you do have any questions as well around what you can and can't expense, one of our team will always be available on the chat to speak to, should you have any questions around what you can and can't expense, or any other questions really. So let's add in a new expense. Let's say that there were some insurance costs of £200. I can easily add that in. I hit update, and what this does is it will update my tax position on the left-hand side as well. So I've always got a running total of what my tax bill might be with HMRC. And in this case, I'm due a refund because I've already paid some tax on this, and my taxable income is lower than what I've already paid. And then just to sort of finish this off, we ask a couple more questions around the property. For example, if you had any sort of travel there, if you used the property for yourself after you started to let out the property, then also any sort of losses that you may want to then kind of bring forward. And all of this aims to help kind of maximize that tax efficiency, ensure that you're entitled and that you're claiming back on everything that you might be entitled to as a non-resident landlord. And then the final section is just when you're ready to file, once all the information has been complete, we'll then show you a breakdown of your tax calculation. In this case, I'm due a refund, so we can input some bank details, and then HMRC will automatically kind of process this refund to get paid into your bank account. If you don't have a UK bank account, then a check can also be sent out to your address. And then this is the full kind of tax calculation, which you can see on screen, which kind of outlines exactly, kind of based on your turnover and based on expenses, how much tax you have to pay, with the relevant expenses and reliefs available to you. And that's literally it. Once that's complete, it literally takes around 10 to 15 minutes if you've got all the information to hand. I think the hardest part is sometimes having to look through kind of bank statements or spreadsheets to understand exactly all the different types of expenses that you can claim. Once that's done, it's super easy to then file. You just need to hit submit, and then instantly it will go off to HMRC, and then your personal tax account will be updated within 3 to 5 working days. So that's the tax process. And I guess before we carry on, I guess we'll then kind of answer some questions from the Q&A on the chat. So if you have any more questions, just kind of add them on there. And also just to add, in terms of tax filing, we are running a 20% off the £99 fee to file with the code on screen. So non-resident sort of tax returns are usually quite expensive, but we are trying to keep this as affordable and super easy as well. So 20% off the £99 filing fee using the code. Cool. I will then move back into this, and then we can take a look at some of those questions that we've got coming through. So let's take a look at what we've got. So if you were in the UK less than 187 days in the tax year, say from April to August, can you still be a split year?
Yeah, so the answer is yeah, you can, Beth. So essentially you would be, I'm assuming in this case you've potentially moved out in August, but you can be a resident up until August and then a non-resident thereafter. So it's the 186 days is a automatic test. That's just to make it automatically resident, but it doesn't mean that if you are spending less, then you can't split. So you are able to split the year. Some people split the year for as short as a 6-week period if they've sort of left in early June. So whatever sort of your situation is, and provided it obviously meets all the rules, split years can be as short as a couple months.
Awesome. And then if you co-own a property with your wife, would tax-free allowance for rental income be combined? So that would be the case, as mentioned in that example. Essentially, the kind of personal allowance would be for each individual, and that rental income would then be split into each of the individual tax returns.
And just on that one as well, I'm sorry, just because I noticed James asked a little additional question around his interest. So yes, you can. It's not, as you probably know now, the rules in the UK have changed. So the interest would not be considered as a expense and a deduction. What would instead happen is you would get a 20% fixed income tax deduction. So for example, if you had £500 of mortgage interest, which was your half, then you would get a £100 income tax deduction. If you have no tax, then that's carried forward. And if you do have tax, it's obviously the £100 taken off. So yeah, that answers that one. Sorry, yeah, cheers, Arch.
No problem, no thanks. I think on that same type of question, in terms of mortgage interest, if it's interest only, you can still claim it. So you can only actually claim the interest part of the mortgage. The repayment part, if it was not an interest only mortgage, would not be allowable. And as Eamon mentioned, it's done as a tax, as a credit instead of as a expense or a full deduction. Cool. And then we've got me and my husband moved out to Dubai on August 7th this year. How does this affect our UK tax? So I guess in this example, if you qualify for split year, your case would be one where you could file a split year tax return from August 7th being UAE tax residents. I guess as well, if you don't need to file a tax return, you can just file a P85 form, which effectively kind of tells HMRC, right, I'm moving out of the UK, I've paid X amount of tax and I've earned Y amount in the UK. And then more often than not, you can get a tax rebate, because if you're not going to be in the UK from August until April, you can normally claim that tax back. But if you do have a rental property or have some UK sourced income ongoing, then it might be better to file a split year tax return at the end of the year.
Perfect. Cool. I think that ties right into the next question here as well. So that P85 can be a way of notifying HMRC. So you've got two options. You file split year. Well, to claim split year, if it's going to be useful for you, you have to do that via a tax return. So once a tax year is ended, you would file a tax return, and on those residence pages, you would mention split year, you'd put the date your tax year is split from. So that could be, for example, if you've left to start working in Dubai and you consider to continue to receive some UK sourced income, then you need to file a return. So you would put the split year on. If, for example, you just left to Dubai and you have no ongoing UK income and you were employed, for example, you can just send a P85 form and that should be sufficient. So you don't have to start filing tax returns. Perfect. And then we've got a couple questions from Ollie. So essentially, again, I'm assuming here that you are sort of a full year non-resident, so no split year. You've moved out to Dubai. So if you're living and working in Dubai, then you have that sort of 90 and 30-day rule we discussed. Now, again, looking at your next questions, you asked about the work. So if you are working in the UK, then it's 3 hours or more is considered as a UK workday, and that is any duties in relation to your employment or self-employment. So that could be emails, could be, I don't know, emails, some Google Meets, etc., as well as in-person meets. So it's 3 hours or more work days. So you want to keep that to 30 or less. What can happen is when you go over 30 work days, is you basically trigger a UK residence, and those sort of 40 days, if you've gone over, will be subject to UK tax. So it's worth staying within those amounts. I mentioned 26 days. I'm assuming of those 26 days, not all of them are for work. So if you are looking to come back in March, I would just make a note of what you've done work and what you've done non-work days, and just stay under the 90 and 30 days. Perfect. So this is actually quite an interesting question. It's caught a lot of people out now. When it comes to employment and self-employment, you, the individual, are the source of the income. So even if you have, for example, a employer based in the UK or an employer based anywhere, because you are the one working and the one performing those duties, where you are based is the source of that income. So if, for example, you are sat in Dubai working for your UK employer, that income is technically Dubai source. So we can't go into it all on this call, but essentially you may be in a situation where you do not need to pay UK taxes because they're all earned from abroad. It also links in sometimes with your employer, because they have to be careful because they pay employer national insurance. But in essence, if you are working remote, the income is UAE source because that's where you are, and therefore if you're non-resident in the UK, if you've left the UK and you're not a resident there, it's not taxed by the UK. Perfect.
Cool, that covers this one as well. If I'm a director of a limited company and pay myself from my company, how would I be taxed when moving to Dubai?
Yeah, again, so depends how you're paying yourself. A lot of limited company directors, they pay dividends or salaries. If you are paying dividends, then there won't be any tax on that, because UK dividends are essentially treated as disregarded income for non-residents. So you can pay yourself dividends and not pay any tax. We'll touch on it in a slide potentially if we've got time, but your dividends can be re-taxed if you move back to the UK within 5 years. But initially, if you're paying yourself dividends, they won't be taxed. If you're paying yourself a salary, very similar to what we've just sort of mentioned there, the salary technically wouldn't be taxable. You can get yourself put on something known as an NT code, which stands for no tax. So you might need to have that quick conversation with HMRC to say, I'm paying a salary, but I'm not based in the UK. All the work's done in Dubai, and therefore it could be non-taxed. Worth noting though, as you're a director, the rules are a little bit stricter. So if you're a director, as opposed to like a normal employee, any days you put back in, go back to the UK, can be taxable, not looking at that 30-day rule. all days could be taxable, and it also depends what you do as part of your role as controlling the company. So yeah, a lot more complex there. Probably something you want to have a chat with someone around. Perfect.
So this is around voluntary NIC contributions as a non-UK resident. So I guess kind of with this, it's not necessarily advice, but I guess kind of you may want to continue contributing to national insurance in the UK to qualify for things like state pension. Now, there is an online form that you can complete on the HMRC side where you can essentially set up a direct debit from a UK bank account to kind of pay into HMRC each month to cover your NIC contributions. It kind of depends on your personal circumstances and something that depends on if you want to return back to the UK, if you want to still kind of qualify for things like state pension and things like that. What I might do now is I'll just skip back to a few slides before, just before we complete all the other questions. There was just a couple other things that we wanted to cover off today around should you set up a limited company when it comes to your rental income, and what are those kind of pros and cons of doing so.
Yeah, cheers, Arj. No, we had a few questions from a lot of the Brits in Dubai group who have moved back over to Dubai and have asked around their sort of UK property. So we won't go into it in detail because it's probably a bit unrelated right now, but just for a few of you who was particularly looking for this sort of information, I guess the honest answer is there's no best way for and like every person's unique. It's based on your scenario. The things you need to consider is how much sort of income you're receiving. Are you going over the sort of 20% bands? When do you look to sell the home? Because if you sell through a company, it's going to be more expensive. Are you using mortgages? Obviously, in a company, the interest is deductible. And do you expect to go back to the UK soon? If you are living in Dubai for the foreseeable future and don't expect to go back, well, then it may make sense to own it in your name, use your personal allowance and pay less personal tax. But if you think, actually, I'm going to go back to the UK soon, in a couple of years, I'll be earning a lot of money, then you may look to incorporate. I guess it all comes down to your situation and something we can help with if you need that conversation. And then the last point in terms of technical side of things is this temporary non-residence. So once, assuming now a lot of you guys have left the UK, you moved and you're in Dubai full time, just wanted to bring up this topic of temporary non-residence, especially as someone mentioned around taking money from their company. So if, for example, you have left the UK, now you're non-resident, you do not pay UK capital gains tax unless it's on UK land and property. So let's say you have shares or you own a business and you sell this when you're out in Dubai and you don't pay any capital gains tax on that. But let's say you move back to the UK within 5 years, then that sale can become chargeable to capital gains. So just another point, I'm not going to go into details, we've got a couple minutes left, but if you have made sales and capital gains whilst out in Dubai, just have a little pause and a little check before you decide to permanently move back to see if you fall under temporary non-residence. This is also the same with if you've been taking dividends from your own limited company. Of course, they wouldn't have had any UK tax, but if you move back, same sort of rule applies in terms of the 5 years. So temporary non-residence. And additional sort of tips as well. I just wanted to go in. I know Arj mentioned it on the quiz, but we've had so many questions from guys from the Brits in Dubai group around sending money back home. Now, of course, if it's to like immediate family, whether you're in the UK or not, you can always send money to like your immediate family. Could go into inheritance tax. Well, for now, yeah, you can send money to immediate family. If you are in, if you're sending back like your earnings, and let's say you've made your salary, as long as you're non-resident, you can send that back in. Let's fast forward to a point, maybe you decide to return to the UK. If you've built up a mass of savings whilst you've been out in Dubai, that will be considered as pre-arrival capital, meaning meaning you would essentially not have to pay any tax. So let's say I decide to move back to the UK next week. All the money I have up until I move back to the UK, you can bring that in tax free. If you are continuing to receive income in the UAE, so you may have a UAE business and you have UAE clients or whatever, and you're making money out there, then you need to be very careful, because once you arrive in the UK, you could start getting taxed on that income. So another point, as well as checking the temporary non-residents, if you're thinking to move back, is to make sure that any ongoing income you might get from UAE is sent to a separate bank account to all the money you earned before you came back. Because then if HMRC ever asks questions, you've got pre-arrival capital in one bank account and ongoing income in another bank account. If you mix them together, it becomes a mess, in short, and taxes will apply. So great. Sorry, that was the last bit of technical tax done. I think we've got a couple minutes, Arch, to do a couple of
Yeah,
questions.
just a couple of minutes. I guess just to add, if there's any questions that we can't sort of get through within the next in the next couple of minutes, we will kind of keep note of it and then send out an email with answers
Yes.
to those questions. And happy to also support sort of separately outside of this webinar too. But if
Yeah.
we go to where we were, so if you are on sabbatical from your UK job and you haven't filled out a P45 as you haven't left the business yet, but also renting out property, what do you need to do? So I guess because you're renting out a property, you may need to file a self-assessment for that. I guess the sort of rules in terms of filing a self-assessment is if you earned over £10,000 from that property, or £2,500 in terms of profit. So might need to do a bit of a calculation there to see if you need to file or not. But at the same time, I think you said that you left in August, and if it's just a sabbatical, you may not qualify for split year treatment if you're not starting work elsewhere, and if you're coming back to the UK, I assume within the next 12 months or so. So that might be something to look at in terms of if you could qualify for split year. Otherwise, look at you may just need to report that rental income in any case as a UK resident, or even if you were to qualify, that UK rental income would still be taxable in the UK. I can reach out separately on that as well if you need. Is there
For
anywhere?
Katie in particular, so I know she said they left in August 22. So post April 23 is when they'd need to look into it.
That's true.
Yeah.
That's true. Is there anywhere on the Gov website where you can check if you have triggered an auto residency in the UK? So I believe on the Gov website they've got the statutory sort of residence tests. So they've got kind of what we've outlined today. So you can kind of look through those tests and see whether any of those are applicable to you. And then if so, I guess that would be you may qualify as automatically UK resident. But I guess there's not like a quiz, I guess, that you can answer. It's just a government help sheet, I guess, on the statutory resident.
Yeah, so to answer, sorry, I was to say for this question here, the working remotely counts as work days. So of those 90 days, only 30 of them can be spent working, even if it's remote and on your laptop. So that's where the 90 and the 30-day comes in. So you can do 90 days if they're leisure days, like meeting family, holidays, so on. Again, try to be careful not to do significant breaks of 31 days or more, because you might not meet the condition. But for your case, Hassan, you've mentioned that you would remote working. So yeah, if you're working on your laptop in the UK, that's a work day. So 30 maximum. Cool. And then we've got Claire. Claire's joining the Breaking Bad team to try and make her way around the taxes. But no. In terms of this situation, Claire, right? You, if you are getting paid by overseas clients, again, this is something we're probably going to come and message you after, because there could be a lot more complexities, right, when it comes to businesses and companies and VAT and all sorts. But the short answer would be, if you are based in Dubai and the UK account is only a means of receiving payment, then that shouldn't be triggering any UK taxes. So yeah, that should be fine. And then yeah, you should be able to bring that money into Dubai without any issues.
Awesome.
Cool.
Final couple ones. If your sole income comes from renting out your UK property while in Dubai, would you be classified as self-employed? You'd probably be classified as a landlord. And as mentioned on one of the other answers, it depends on your income. So if it's over £10,000 of income or £2,500 worth of profit, and yeah, that would be if you needed to file your self-assessment. Also, I think that sort of takes us to the hour. So we'll answer any other questions as well via a separate kind of
Yeah.
email. And we do hope to be out in Dubai, hopefully sometime this year, so we can do an in-person webinar seminar.
I was thinking that when I was de-icing the car this morning and thinking we're doing a webinar for Brits in Dubai. You know how much I'd want to be out there, but then equally I wouldn't have been able to watch the Arsenal game on Sunday and see us obviously beat the rival Spurs. So there's pros to living in the UK as well.
Awesome. Well, thank you so much, everyone. Really appreciate you taking the time to join us on this kind of Tuesday evening, if you're in Dubai, or kind of Tuesday afternoon, if you're still in the UK. If you have any questions, feel free to just kind of ping us a message. We'll send out an email with our details as well so that you've got it. And yeah, thank you.
Thanks a lot, guys. Thanks for joining and listening.